Today's three-stock lunch, where we take a closer look at three names that are making moves today. And here with our trades is CNBC contributor Courtney Garcia, senior wealth advisor with Payne Capital Management. Up first, Home Depot, the home improvement retailer, beat earnings and revenue estimates even as sales dropped there. Shares of Home Depot flat today, up about 14% over the past year. Your trade, Courtney, on Home Depot.
I would be a buyer of Home Depot here. We did just see that their earnings expectations were actually beat expectations, which is great. But their outlook was actually a little less than Wall Street wanted to see. But a lot of that is due to the fact that the housing market has remained a lot more sluggish than it was expected, mainly because mortgage rates are still higher than people wanted to see. But I think the question is when rates are going to come down, not if they're going to come down. It's not going to be here in the next couple of months, but likely whether it's later in mid-year or later in the year, you're going to see that come down. That's going to lead to more housing activity, which is going to lead to more sales for Home Depot. And I think you're going to want to make sure you benefit from that. And this is a company who's returned about $7 billion back to shareholders through interest and dividends and share buybacks in the last 5 years, which is absolutely a company that you want to be a part of.
All right, let's move on to another one that's sort of in the building space, I suppose. Caterpillar, Evercore ISI, giving the heavy equipment manufacturer a downgrade, saying it sees the industrial space cooling off. Shares of CAT down about 2% today. Courtney, your trade on the big cat.
Yeah, industrials, I think specifically Caterpillar, is going to continue to benefit from the infrastructure spending bill that was passed. And you're continuing to see unprecedented infrastructure spending go into things like construction, and a lot of equipment sales are going to benefit from Caterpillar. But on top of that, electric vehicles, actually their CEO pointed out, you're needing to mine a lot more things like cobalt and lithium, and you need equipment to do that. And that's where something like a Caterpillar is going to benefit you. And they did fantastic last year. They beat profits, sales expectations. I mean, they kind of made records across the board. That stock was up over 23% last year. But interestingly enough, their earnings were up over 53% last year, which is why even though it did so well last year, it still trades at a pretty reasonable 15 times next year's earnings. And I think that's absolutely something you want to make sure you're taking advantage of.
Interesting. So that one's a buy. Let's go on to gold. Shares of that commodity, well, not shares, you just buy the commodity. They're up nearly 1% today. Your take on gold, Court?
I would not be a buyer of gold here. The reason being is gold was at about $2,000 or almost 5 years ago in 2020, and it is still hanging around that same price right now. There's been a lot of false starts here. It actually looks like it's starting to lose momentum again for the fourth time in the last 5 years. There's been a lot of catalysts of why gold should do well. It's supposed to be an inflation hedge. We're at 50-year high inflations. We have government spending that continues to be high, a record high deficit. But all these things have not led to a breakout in gold. And I really don't know what is going to further bring that breakout. And I think it's probably going to stay range bound here. So for a lot of those reasons, I actually don't think this is something you need as a long-term strategy.
All right, let's leave gold alone then. Courtney, thank you very much. Courtney Garcia, we appreciate it.